Hello, I'm Will Sawyer. I'm the lead economist at CoBank, focusing on the animal protein industry. CoBank is the largest lender to food and agriculture, and as a result, we try to research all the key sectors, whether that's the grain and farm supply sector or my sector in animal protein. If you have any questions after my presentation, you're more than welcome to go to our website at CoBank.com, where we have a lot of free research, not just on animal protein, but all of these sectors. So let's jump in there. You'll notice in the title here of my presentation that I've added COVID-19 into the story, into our minds of this next few minutes in the presentation, mostly because it's something that if we skipped it now, I think we would miss a huge opportunity to better understand how the global protein sector is being impacted by this pandemic. And I've tried to break down this conversation into four key areas. The first area is how the global economy is being impacted by COVID-19. What does that mean to consumers, and what does that mean to trade? Very important issues for global food and global feed demand. Finally, African swine fever. I don't want us to forget this very important virus that's impacted not just the China and the Southeast Asia market, but also Eastern Europe. And finally, the COVID-19 experience in the U.S. is not unique, but it may be a good indication of other challenges and risks into the global protein sector going forward. It's my home market, one I'm very familiar with, so I thought I'd spend a few minutes talking about that as well. And then let's talk about the outlook. Where do we go here in terms of food demand, feed demand, and animal protein demand? All right, so let's jump in when we look at the global economy. This is a global pandemic. We all know that the maps available today on COVID-19 are quite amazing, and it does show a very significant impact of the virus on a global basis. No market has been immune or has been separate from COVID-19, but there's a multi-phase impact to the pandemic. We see the first phase happening in China, where it originated. That was the December, January, February timeframe. When we think about the next phase, that was in the developed markets, North America, Western Europe, Korea, Japan, a story that started in February, but really started to impact March and April. And then finally, today, where we go from here is on the developing world. It's not a new story, but the impacts are just now beginning to be felt. And we do see that in economic growth, or unfortunately, the lack of economic growth over the last couple of quarters. The Great Recession just over a decade ago was very painful, not just in protein sectors, but across the global economy. You see that contraction there of just a couple percent. These are quarter over quarter numbers. So when you think about the last couple quarters of 2020, the first quarter and the second quarter, which we're about halfway through now, you see a level of contraction that makes that Great Recession seem like unfortunately, a very easy time, and something that we're feeling in the U.S. and a lot of other parts of the world. What's also important is that the contraction isn't just in the advanced economies like we saw in the Great Recession. It's in China, it's in the emerging markets outside of China, and of course, the advanced economies as well. But we do see and do hope for a rebound in the back half of 2020 and into 2021. But as we have seen an increased globalization of food, we also see interdependence of supply chains as they become more reliant on the Chinese market, especially in Southeast Asia. You think about Cambodia and Vietnam, or over 10% of their supply chain is focused on products and goods from China. That goes down the list, but very significant markets, not just in Southeast Asia, but around the world, look to China for supply. And as those supply chains have been disrupted due to COVID-19, that's caused some significant risk, especially as consumers and producers and workers have been home a lot so far 2020. The government restrictions, stay home orders across Southeast Asia and the world is having negative and positive impacts. Let's start with the negative first. Of course, that has contracted demand for food, demand for food service, trade, and obviously the economies have contracted, as we saw in the previous slide. But those economies that shut down earlier and more quickly also are starting to get folks back into the office more quickly. That's a great sign. That's something that we really want to focus on, positive signs at this point. But where do we go from here? That's where trade really becomes an important consideration. GDP, or the overall economic health globally, and the lack of trade is something that unfortunately go hand in hand when we do see these economic contractions. So you see in the Great Recession, 2% reduction in GDP, but an over 15% reduction in trade. That level of sensitivity is something that draws some concern as we think about global trade in the back half of 2020 and most likely into 2021. Let's talk about African swine fever, a story we will talk more and more about, a hot topic in 2019, but it's not over now, because while our pork production in China fell by just 15%, by the time the year was over, the Chinese hog herd had declined by more than 50%. So the tail of that African swine fever story is going to impact reduced meat supplies in China throughout 2020 and 2021. That's a story that's not over yet, but we do see some positive signs, these green shoots of growth in the Chinese hog herd. It seems as though that herd bottomed in the fourth quarter of last year. Not a huge level of growth, as you can see in the sour inventory that's only up a few percent month over month, but that growth is very important to see. The pig inventory on the other side of things, seeing some double-digit growth, but remember, we're starting at a base that's probably 60% below where we were 2 years ago. So still a long way to go to get back to normal. But the Chinese consumer is coming back, and the Chinese worker coming back in very different ways. Yes, of course, we saw the decline where retail sales in the first quarter in China fell by over 20%. We see the numbers in the last couple of months looking a heck of a lot better, but of course, not back to where we were a year ago, and not the growth that we expect from the Chinese market. On the other side, it may be more important to global food trade, given that most of that imported food does go into the food service sector. Hotel occupancy, while it's not down 90% like it was at the end of February, it is still down over 50% as we look at it today. And so as a result, that imported food market is something that we see a lot of concern in, and it's starting to impact lower hog prices. The Lunar New Year, the peak of pork consumption in many markets around the world, and China included, peaked at 40 yuan per kilo just a few months ago. Since the hog herd is expanding in China, since imports are starting to really expand from North America, pork prices are coming down. Now, when we look at this price versus a year ago, it's still double where we were, double the previous high set in 2016. So there's still a lot of incentive, and we still see Chinese hog producers expanding production, but most likely at the cost of lower imports through the remainder of 2020. It's a very logical economic correlation between prices and imports. As these prices come down, we see imports coming down with it. Now, let's talk about trade from the U.S. It's a very important subject here, because this becomes less of an economic conversation and more of a political conversation. When we do see challenging rhetoric between Beijing and D.C., we see cancellations of U.S. pork sales into China. We saw that a couple of months ago in early March, and we saw that last week when China canceled 12,000 metric tons of pork. That may have had nothing to do with politics. It may have everything to do with politics. It's hard to know, but one thing we know is that the pork industry in the U.S. has struggled significantly in the last couple of months. We'll look at that in the next couple of slides. So these are trade flows that need to continue to help keep the U.S. pork sector afloat. Let's talk about COVID-19 in the U.S., something that's dominated the headlines, I think, in global protein, and rightfully so. The first kind of signs of a real disruption in the supply chain was in March, when many restaurants across the U.S., Eastern or Western Europe, Korea, Japan really shut down in a way we'd never really seen before. Every consumer went to the grocery store, and you can see the growth. That's now starting to normalize, and you can see some inflation starting to pick up in the last couple of weeks in the retail sales data. We expect that rate of inflation to hold at that level, maybe even expand through the end of May and most likely into June as well. But one area that's not really seeing a huge level of improvement is food service, especially in the beef sector. That's a sector where over half of their sales are into full service restaurants. It's something that's very popular across Southeast Asia as well. Those sectors are down probably more than 80%. They're getting better, but they still have a long way to go. And the food service sector is the one that I think we need to keep an eye on first and foremost to see how quickly we can reopen our demand, because the states in the U.S. are starting to reopen. In the green there, you can see a partial reopening of about half the states in the U.S. This is as of a couple weeks ago. But as someone that lives in the Southeast, I know while my state may be partially reopened, many consumers are staying at home just as if we were under stay-home orders. And that means, to me, this is going to be a slow rebuilding of demand, whether you're talking about North America, Korea, Japan, or Western Europe. But it has driven a lot of shutdowns in meat plants. In April, we saw over 24 meat plants close, beef and pork, primarily in the Midwest. And COVID-19 has been a major issue for all those plants. And as a result, we've seen a lot of influence from our regulators and from the White House. A couple weeks ago, actually 3 weeks ago now, President Trump placed the meat plants of beef, pork, and chicken under the Defense Production Act. That has since helped many of those plants to reopen. Today, all of the plants that had closed in April are now back open, but they're not operating at a level that we would like them to see, or we would like to see them, because as you can tell, we are rebuilding, but we're still far from where we need to be. If we think about the late April period, the worst of things, meat plants of beef and pork were operating at 55-60% capacity utilization. Very, very weak. It has now improved to 75 to 80% utilization over the last few days. I expect that trend to continue, but not at the same rate. Labor challenges will remain, and it will make it more difficult to get back to 90, 100% going forward, because we need that because of the backup in livestock supplies. And so when we think about meat availability in the U.S. market, primarily beef and pork, where the challenges have been, we see the mid to late May period, which we are now wrapping up in the month of May. We do see that as the hardest time for meat supplies, where we see the risk of consumer inflation and shortages in the meat case. It's something we're seeing in the U.S. market, and something that's going to impact our ability to export, I think, in the next summer months. But we do see it improving, as you can see, through the end of June. And with that improvement, we do see producer margins looking much better than where they were a month ago. April was probably, when we look at all the different sectors from a producer context, the most challenging month in the history of U.S. animal protein, or at least in the last 30 or 40 years. We've never seen losses to this degree. Things are now improving. You see hog producer margins back into positive territory. Same trend for chicken. Cattle is taking a little bit longer, and that's a little bit of the nature of the supply chain. But I can tell you, based on data we see today, those margins are very close to break even on a cash basis. That's a very positive and a very good sign going forward. Let's talk about the outlook. One thing that has not changed, as someone that speaks to many producers and processors in the U.S. protein sector, is that the developing markets, especially beef, pork, and poultry, are our areas of focus. We do see those as the areas of growth. The developed world isn't going to be the driver that it has been the last few decades. The developing world will be our area of focus, not just China, but in many parts from Vietnam, India, the Philippines, very important markets and areas of focus for the protein sector in the United States. But we do draw some concern as to how consumers are thinking about getting back into restaurants, getting back into their normal day-to-day of food consumption away from home. You'll notice that these two periods of survey, early April and late April, very little difference between how many consumers are looking to get back into restaurants than where they were during the worst of the COVID-19 outbreak of the U.S. That's drawing some concern for us and causing us to reiterate that same point of a few minutes ago, that we think it's going to take time for the U.S. consumer and probably the global consumer to get that level of comfort that we saw driving consumption growth for year after year over the last decade, especially in the North American and Western European markets. Also, new consumer supply chains. Really, these aren't new in the Asian markets, but they are expanding in the West. Whether you're talking Amazon or Walmart or direct to consumer, straight from a meat producer, I think this is something that's going to really stay with us even after that level of comfort of COVID-19 being something of the past draws consumers back into normal patterns. Many consumers have tried it for the first time. And once they try it, I think a lot of folks are seeing that as a real opportunity for convenience, something that I think will continue to drive growth for the food sector going forward. Something less domestic, but more internationally focused. And an issue that doesn't get as much attention as I think it should is the currency situation globally. The strengthening of the US dollar over the last decade to now 30% above where we were in 2010 is drawing a lot of impacts on the competitiveness or lack thereof of the U.S. market, whether that's in relation to Brazil, China, Mexico. These are all markets that are much more competitive, and it's hurting U.S. Exports as a result. I think most importantly and most significantly when it comes to food is the U.S. and Brazil exchange rate. Today, the Brazilian real is, 60% below where it was 10 years ago. That's a huge help to those exports of animal protein and of grain, and something that we see as a risk going forward through the remainder of 2020. So a few conclusions here as it relates to the global economy, African swine fever, and COVID-19. The first thing is that COVID-19, the global impact of the virus, is something that we're still trying to get our minds around. We have a lot more theories than we have facts, and so we're still working towards understanding it. But one thing we do have a lot of confidence in is that the contraction in our global economy, our global demand, that is going to recover, but far more slowly than they contracted. And so we do see improvement from here going forward, but it's not going to happen nearly as quickly as we contracted over the course of February, March, and April. African swine fever is that area where we do see continued demand. I think if it had not been for the lack of swine fever hog losses in the Chinese and Eastern European and Southeast Asian pork markets, we would have a glut of protein in the market today. And that's something that if it had not been for that, it would have been a much more difficult time for the global producer, something that I think we should not forget. But when we think of where we are today, due to trade regulations, trade opportunities, trade agreements, we do see the fact that there's a supply and demand opportunity on both sides of the Pacific, whether that's in North America or in Asia, where the North American market, and that's not just the U.S., that's in Canada and Mexico as well, do have additional supplies and with a focus on the developing markets of Asia. That's something that hasn't changed, irrespective of the COVID-19 situation. And then finally, when we look at COVID-19 in the U.S., it's something that I think is something for us to watch as COVID-19 spreads in some of the more developing markets. We see the stockpiling of food we saw in the U.S. in March. We saw the plant slowdowns and shutdowns in April. Over the course of just 1 month, over 40% of protein capacity in beef and pork declined very, very rapidly. That's now rebuilding, but it's happening. That rebuilding is happening relatively slowly. And now we are in this phase of rebuilding, but also a focus on demand. And that's something where we need to think more strategically going forward. I think we see some opportunities to find new consumer channels, supply chain channels, whether that's direct to consumer through curbside pickup, whether that's direct from the producer, or whether that is online shopping. All of these are new channels of the last 10 years, but they are picking up at a much greater and greater pace. We do see the risk of double-digit unemployment, not just in the U.S. market, but globally, to be a major factor. One thing that has become a major topic of the last few weeks are the benefits that are being received by many consumers and unemployed in the North American and Western European markets. Those benefits are going to start eroding, and so the impact of a lack of jobs, a lack of income, is going to impact demand. And when we think about the global food marketplace, it's far more interdependent than what it was 10 years ago or 20 years ago. And so the risk of losing domestic demand and international demand, both of those factors draw concern for us as we try to rebuild our industries in North America and Western Europe. As I think about the developing markets in Southeast Asia and in South America, we do hear of more plant slowdowns and shutdowns. It's a story that we know, unfortunately, all too well here in the U.S., but we do see some strategies that are learnings and lessons for the global protein sector. One is that reliance between meat producers and processors and their regulators is a very important symbiotic relationship to help through these human health issues. It helps to find ourselves in a better position that way. Second, I will say, is that the younger populations in the developing world also give us more confidence of their ability to recover and keep labor, demand, and trade moving at a very important time. Thank you all for your attention. If you have any questions, my contact information is at the bottom of the slide. Thanks so much.